What's up, guys? So, disclosures and disclaimers, as always, this is for entertainment purpose. Nothing should be taken as legal advice or investment advice. Do your own research. Make sure that you have a plan and know what you are doing when you are buying or selling anything. You can win and lose a lot of money investing in stocks. And essentially, we are gambling here on the stock going up or gambling on the stock going down. So let's take a look real quick. This is a quick recap. If you want my full 40 minutes recap on everything that happened and what's going to potentially happen tomorrow, in my opinion, check out that video. It is uploading now. But I wanted to do something short and sweet because 40 minutes, God, that's a long time. But if you are sitting there waiting, watching the market, please check out the video, watch in the background, because I don't recommend you actually sit there minute by minute watching the stock. You don't want to be doing that, in my opinion. This is my opinion on the matter. It's not legal advice or financial advice at all. So I don't think that you want to be sitting there watching the stock, because it can go up and it can go down. If it goes down significantly, you're going to feel like, but we have this chart here. So this is the big bullish reason, is the chart looks very, very good. So this is what happened last month, January, the end of January. We had our first taste of the gamma squeeze / short squeeze. So this is where we're at right here, this little box. I love this, what they did. This is all from Wall Street Bets and Reddit. So go check them out. Go do your own research. Boom. So how they have it? Short squeeze, squeeze up. Robinhood cancels the buying up here. So this is... They cancel the buying at the top, and that drops it down. So that expect Robinhood to cancel buying again. And if that happens, expect a trend very similar to a massive sell-off and then a nice little recovery for a little bit. Expect this to happen again. Okay, if they do the same things, which they probably are going to do the same kind of things, same kind of shenanigans, you have to be prepared for this. So expect this kind of thing. Whenever Robinhood or any brokerage decides to limit buying, that's going to be a downward negative. That's a very big negative. If they don't do anything against us, if they don't limit buying, that is a very, very big positive. So even so, it did stay around that $300 mark for a little bit, and it went on $250 and so forth, and dipped down. We noticed that it didn't go lower than $40. I think the lowest was like $45 or so. So $45 is a massive resistance wall. Like, the stock cannot go lower than $45 right now. That is kind of like the wall, like the diamond hands. It's like, yeah, diamond hands. We're not letting the stock go to 40. Like, screw it. We're just going to hold forever. So we are now going to be testing the $100 mark. We are currently in the same position setup as we were last time. And if you see, so that means we should see a little dip. There should be a small amount of pain coming up tomorrow. Maybe tomorrow, maybe, just a few hours. We don't know how long this dip of pain was. But then the rocket fuel up. To get the rocket fuel up, there's a couple things that need to happen, probably. Again, my speculation on this. We need a catalyst. We need some good news. This could be anything from a tweet from Ryan Cohen again, which I don't expect to see a tweet. He just tweeted yesterday or 2 days ago about an ice cream cone and a frog. A lot of people have decoded this message, and it does look very bullish. Frog is green. Frog goes up, goes down. I love this analogy of this. Ice cream cone is something that you savor and you enjoy. You lick, and yeah. And ice cream cone also drips down. So those analogies of this tweet that he did is very, 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 very bullish. Also, the CFO was kicked out / resigned. That is, news reports, and that was what spiked this first catalyst over here. So we need something like that. It doesn't have to be as big. The last time that this catalyst happened was Elon Musk tweeting about Gamestonks. So he tweeted Gamestonks and linked the Wall Street Bet Reddit. That was the huge catalyst that sparked the movement up to $480. So we need anything like that. Mark Cuban can come out. Elon Musk can come out. Any celebrity can come out that has enough followers on Twitter, some tweets, some viral tweeting, some GameStop just surge in the news media. All this stuff could potentially make the next squeeze happen, and it looks like it's going to happen even more intensely. You can see we are higher than we were last time. Look at this. So the chart is down lower. We are higher highs, and that means we're going to push up higher and higher. according to this chart and according to this logic. So this is also something else. Mark Cuban posted this in the AMA 23 days ago, and just a little advice from a billionaire. If you are still believe the reason you bought the stock and that hasn't changed, why sell? Mark Cuban said their goal is to never cover the short, but that would take the company going out of business or being delisted. That won't happen here. Best thing you can do is hold on to the stock and do business with GameStop. If everyone goes to their website and buys from them, that is going to help the company, which is going to help the stock, which will help everyone here. If you still believe in the reason you bought the stock and that hasn't changed, why sell? And everything Mark Cuban has said in his AMA on Reddit has pretty much come true. So highly recommend that you check out that AMA, understand what Mark Cuban is saying, and do your own research there. But Mark Cuban has been spot on since he did his AMA, predicting pretty much everything that was going to happen. Also, we got some good news about the shorts. So the short data came out. We also found out that there was literally 0 shares to short today. So this is updated every 30 minutes where there's changes. And for the most part, for this 15 to 5 hours right here, if I remember correctly, it was 0 shares to short. That means there was no shares to actually borrow from anybody. That's an incredibly bullish sign. If there's only 15,000, that's incredibly bullish as well. Normally, there are millions and millions of shares available to short, but we've locked all the shares up, essentially. The short interest data has also come out. FINRA has updated, and according to them, the short percentage of float is 60.35, still incredibly high. Yes, it is a lot lower than that 140% of the float, but you do have to remember, this is not taking into consideration all of the shares that are literally locked up, but diamond hands people like, you guys out there. So everyone that's diamond hands is not holding for, not selling for anything. This is going to adjust the shares per float, for example. So this is a very, very strong number. And there's also been data that has come out that they are now shorting the ETFs, which means they're shorting a big group of stocks, which is in turn affecting the entire market. If you saw the entire stock market today, everything was red. Literally everything was red except for a few select things that were green, like GameStop, AMC, Funko actually was green. And I think it's because of the association with GameStop. So there was a very, very few things that were actually increasing in this stock market because GameStop is actually taking all of the money from the other companies. So the hedge funds are losing so badly on GameStop that they have to sell the other shares. They also have to short the ETFs because there's no way to short GameStop. They cannot get the shares directly on GameStop. So they have to go to an ETF and short the ETF. Some of the ETFs are apparently over 200% short of the float. They are in dire straits. There's about 50 ETFs or so that they've discovered on Reddit. Like, you just gotta, I can't make this stuff up, guys. You gotta check out all the research that Reddit has done. Do your own research, make your own decisions, but it looks just disgustingly good for the GameStop long bull people. Oh, and I don't think I've talked about position in this video. We do have a bunch of call options. We've got like 25 call options. We've got about 400 shares, give or take. So we are incredibly bullish. We are going to hedge some of our money, though. We did do that yesterday as well. We sold off, I think it was 5 call options today. So you can see we sold off a couple call options, but we bought some more back. We also bought more shares. Like as of yesterday, we had like, I think it was like 50 shares or something like that, and then today we bought like 400 more shares. So you can see we're adding to our position in different strategic ways. So yeah, hedge your position, sell a little bit here and there is my opinion. This is my investment strategy. This is what I'm doing. You got to do you. You got to make sure that you do whatever you think is best for you. But yes, no one can tell you what to do with your own money. So don't let anyone tell you or force you to do anything that you do not want to do. If you think the stock price is great at $500, sell. If you think the stock price is great at $100, sell. No one should tell you, don't sell, don't sell, don't sell. Like, no one should force you into doing that. You got to do you. You got to make sure that you are happy with all of your trades and all your positions. And yeah, do you. So another chart here showing the Volkswagen squeeze, and this is history repeating itself all over again. They drew the crayon green marker for GameStop. Wall Street Bets loves their crayon markers on the charts, but The one below, the blue one, is Volkswagen. And Volkswagen then it had a nice spike up, and they thought this was the squeeze here, right? 400 to like 450. It went from about 250 to 450. They're like, oh my God, that's amazing. It dipped down significantly to about 300. And then a few days later pass, and it jumps back up to 400. They're like, oh my God, the squeeze happened again. This is absurd. This is crazy. And then it just tanked down to like this almost $200 price point. And then they got a major catalyst. And the catalyst then spiked the stock up to almost 1,000 euros, it shows on this chart. A crazy, crazy spike pretty much instantaneously. So you can see the power of the catalysts. So this is a very, very historic happening, and GameStop is seeing the same kind of thing. So we've done the first two. We've done the one, we dipped down, did the second one, done and down, and then now we're in this one. We might see a little bit dip, which we have seen the last couple hours in the day. We saw a little bit dip down to about $100 from that 180 high point, and then they're predicting that the squeeze is going to be squoze, and we're going to go up to over $1,000 because they did some computer simulation AI program thingies on Wall Street Bets. Some smarter people than me have said that I think it's going to go to like $130,000 if I saw that correctly. So just think about that, guys. If the potential is $130,000, anywhere that you bought, if you bought 300, if you bought at 500, if you bought $1,000 share, that is still worth a lot of money if it goes to $130,000. There is, in my mind, there's no way that this is going to $130,000 because I'll give you why. They're going to stop us from buying the stock. They're going to make it so you cannot buy the stock, and that's just going to happen. Like, they're going to screw over people that if everything was fair and balanced, that yes, maybe it might go to $130,000 if it was a completely free market, but they're going to have massive manipulation on this stuff, and they are going to, punish the retail investors to try and save the hedge funds. That's what's going to happen. So don't expect the $130,000, but just know that it is possible to get to like $130,000 via a computer AI model. Last data point is they've actually changed this now. The open interest you cannot see anymore on call options, but we have the numbers. There's approximately 75,000 call options that are in the money as of tonight around the 108 level. So around 75,000 call options that are going to be exercised and used tomorrow, which means is a lot of things are going to happen with Delta and Gamma. So if you're familiar at all with a Gamma squeeze, if not, Google Gamma squeeze, read up, research, learn. There's going to be a huge volatile day tomorrow. Tomorrow's going to have a lot of ups, a lot of downs. They are going to have a significant drop, in my opinion, at 12:15 Pacific Standard Time, because that's when the contracts get closed by the market makers. So the market makers are able to close contracts at 12:15 and force people out of their positions because they don't have the money to exercise these contracts. So at 12:15, expect a massive spike downwards on the stock price. This is from the information that I've seen in the last couple of weeks and what happens with these massive option markets. So 12:15 is a number to grind in your head. 12:15 Pacific Standard Time is something to be very mindful that you should see a massive decrease in price, and then it will probably be a sudden increase in price after that, a massive rebound in the next following 15 minutes or so. That is my prediction on this. So make sure that you are aware of this, and it all has to do with the options contract. You also do want to make sure that you put your shares up for sale in a limit sale and put them at an extremely high price so that your brokerage like Robinhood or Webull or E-Trade cannot lend out your shares. If you tell your brokerage that you want to sell your shares for $1,000 each or for $2,000 each or for $500 each, that is going to be up on the marketplace and it's going to be there sitting, and they cannot lend your shares out to other people. They literally lend out your shares to other people if you don't tell them not to, and it's a default yes. So in your settings, it's going to be like a default yes of like, hey, yes, we can lend out your shares and we'll give you, 1% interest rate or whatever if we lend out your shares. There's a default setting in your brokerage that says we can lend out your shares. And they want to lend out your shares because they want to make money off of this. Because when they lend out your shares, they get money from the shorts that are borrowing your shares. So they're in the business of making money by lending out your shares. In order to get around this, you want to put your shares up for sale. So make it a limit sale and sell them for $500, $1,000, $2,000. Just put them up at a extremely high price so that your brokerage cannot screw you over by lending out your shares. All right, guys, that is it for the short and sweet video here. I hope you enjoyed. Thanks for watching. As always, I will talk to you guys later. And man, this was a long video already at this 15-minute mark, but so much information, so much to talk about. I love this craziness that's going on right now. Hopefully you guys are enjoying the entertainment. And if so, hit that like button, subscribe to the channel. I will talk to you guys later. Thanks for watching.